for the balance sheet. Some are born to bring a smile. Some usher the future. Some make you stand tall. Some numbers light a fire and fulfill wishes. Some spoil you silly. Some echo joyful shrieks. Some numbers have smiles written all over them. Some make the planet happy. Some make the planet healthy. Some numbers rise against all odds. Some are made for dreams. Not all numbers are born for the balance sheet. As we spread our wings globally, we at Mahindra believe that the numbers we are most proud of are the number of lives we have touched. Mahindra, together we rise.
Good morning, ladies and gentlemen. A very warm welcome to you on this Tuesday morning on Dalal Street. I'm your host, Shail Bhattnagar, joining to you from Delhi. The mood is distinctly downbeat on Dalal Street, ladies and gentlemen. It's a thick color of red across stock prices. Advanced decline is 950 stocks to 1500 stocks in the red. So it's almost 2:3. For every 2 stocks that are in the green, there are 3 that are falling. All indices that we track, all major ones out of 19, are about 17 of them are in the red. There is selling pressure all around. There is very little participation as far as bulls are concerned on the long side. Yes, you have individual outperformances, some of them in the metal space, some of them in the government insurance space, but overall the sentiment is weak. This is the 6th consecutive week of negativity on the Dalal Street, and that's mainly because of the rising tariff war, dismal first quarter performances from blue chips, and of course consistent and heavy selling pressure on a net basis from foreign institutional investors. To get a gauge, a sense of where the market could be, are we headed towards a bear market territory? We'll discuss this in a lot more with our very dear friend Mr. Arun Kejriwal. He's been in the market for 4 decades and knows it in and out. Namaste Arunji, and a very warm welcome. To your mind, how is sentiment placed at Dalal Street? Are we headed for more pain? For the last 5 weeks, week on week, we've had consistent selling pressure.
So, Shail, before I answer that question, to your opening remarks, let me add just one factor, which I believe you probably overshadowed, missed out, or it slipped your mind. The current long positions are being held by the bottom of the pyramid investors, and that, according to me, is a cause for concern. The small investor, the retail investor, believes uh, economy is in fine fettle, the trade wars would get resolved sooner than later, and every dip is a buying opportunity. This has forced him to continue to remain long. And now, like you mentioned, 6th consecutive week of negative impact in the market is not giving him that exit route that he might be now searching for. Now, getting back to your question, the sentiment is negative. We have liquidity in the market due to various reasons. A lot of it is getting used up through mutual funds who are aggressive buyers even now and matching the FPI selling as it happens on a day-to-day basis. IPOs, PE investors selling out, promoters selling out, OFS, etc., keeps the market busy every other day. And fundraising, by whatever name you call it, seems to happen every single day, no matter what happens. So, all of this put together makes you wonder where are we headed to? But very clearly, in the short to immediate term, I believe we have pain to encounter and follow.
Okay. Uh, Arunji, you've been a very long-term observer of the market. The current state of Indo-US relations takes you back to the 1980s, 1990s when the relationship was very prickly. You had the US backing Pakistan for its, nuclear ambitions. They had, sold F-16s to Islamabad, and more or less they were very negative on India's overall growth. All of us remember the cryogenic episode as well. How do you see this tariff war now panning out? India has come up with a statement yesterday saying that it will work towards its national interest and make sure that its economy is not buffeted by rising oil prices. What do you think will be the end game?
So, very clearly, let's understand and to put the entire thing in perspective. Somebody is miffed and piffed about the fact that he has not been nominated by India for Nobel Peace Prize. He is disgusted at the fact that we have not accepted what his claim was, that he intervened and stopped India-Pakistan war from escalating. So it's all about a game of one-upmanship. uh, I never expected in my lifetime that the august office of POTUS would stoop to such low levels to try and get recognition for something that he doesn't deserve. I mean, to add insult to injury, he's the one who pressed the button on Iran and he says, I am a peacemaker. So, all of these things, his steps to increase tension globally, politically, and financially through this kind of tariff shows that he is worried about his own home country. Let's understand, Shell, that at the end of the day, who pays for the tariff? It's the American citizen. It's the American economy. If you are going to make all your imports that much more expensive by putting this kind of tariffs, it's going to hurt you, not anybody else. So I believe we are in a very tricky situation, and I mean, not that the Americans would like to be told this, but they are the people who are now in hot water and they need to worry how much of inflation they are going to see in the coming months. Currently, they seem to be insulated because prior to the buildup of tariffs being announced, there was sharp inventory rise in America, which is now getting consumed with fresh supplies not coming. To your last question, uh, trying to compare the scene with 1980, I believe 1980 India was a worried country. We didn't have the resources, we didn't have our own strength, we didn't have our you know capabilities which could take us through. Today, 2025, I believe we are looking at a different India, a country which has built up tremendous capabilities, a country which has respect in many quarters of the world. And come what may, America may try to dictate things, but it's not going to work out.
Fair point. And yes, in the 1980s, 1990s, when the economic structure of the country was not as strong, it did have a very, very strong foreign policy. and of course an equally strong political will. Let's hope that it makes a comeback and all of us weather this storm as well. The fact, Arunji, is that all of us will remain a part of the market irrespective of what kind of headwinds we face politically or diplomatically. Our job is to put money to good use. At this point of time, what is your thought process? Is the government looking to boost the domestic economy to offset this drop in exports? What do you think will be sector rotation towards this quarter, which is the second one which is running?
So it's a very interesting question and something for which I don't have a ready answer. But let me try and attempt uh, putting some sense to your question. Uh, I believe we have to reinvent where we have pockets of strength and where we can sort of play on it. Make in India, which started a few years ago, seems to be taking shape. A lot of things are happening. We had a very interesting statement from Apple yesterday, which said that more phones sold in America are now manufactured in India than China. And at the same time, that other Apple products like the Mac, the computer, etc., come from places like Vietnam and no longer China. It's a very telling statement, and Apple is representative of America future. I believe many more things like this are happening. We are learning assembly line, we are learning production, we are learning how things happen in the country where you need a robust supply chain mechanism and what delivery schedule is all about. Uh, just incidentally, let me mention that we have a IPO coming from a company from the plastic segment, all-time plastics, which is into manufacturing various components made from the plastic family. And its top customer globally is none other than IKEA. To be a large customer with IKEA, you need to have demonstrated skill sets which are beyond, uh, I don't know whether I should say, which are beyond exemplary. Otherwise, nobody would deal with you, especially a company like IKEA, which is not selling in one country, but virtually across the world. This, mind you, is testament to the fact that India is no longer a country of convenience alone. It's a country of choice. To compete with the giants of China, which is the largest factory in the world, you need to be competitive, you need to have size, you need to have scale, and you need to have the delivery mechanism in place. I believe all of this was demonstrated when I had the opportunity of visiting the company's factory. Taking this as an example, let me tell you, this was one isolated example, but there are many other such examples where you can do things in this country where we are becoming a supplier. It is not just China plus one, but it is also India standing up on its own. The results are a wake up call for all of us. And the one big thing that seems to be missing, Shell, in this entire piece is the consumption. Even though we always talk that India is a country of two parts, Bharat and India, we still seem to be missing out somewhere on consumption. And this is a cause for concern for everybody connected with the markets, whether it be on the corporate side, whether it be on the analyst side. And unless consumption starts showing positive signs, we could be in for some longer haul of problems.
Okay, fair point. This is a view, Arunji, which is now being voiced by quite a lot of sensible people, which say that probably we may be in the tail end of a bull market or the beginning of a bear market, depending upon which side of the coin you prefer. Be that as it may, market is always awash with value, depending upon the lens that you use or the filter that you deploy to find out quality stocks. In your opinion, where does value lie at the point? Do you see, maybe tech, which has corrected substantially because of various reasons, offering value in frontline blue chips, or anything else that catches your fancy at this point?
While tech could be an interesting proposition, I believe if the man at the head in America wants to play vindictive, he could attack the tech sector. It's a big strength of India. It employs millions of people. And if he tries to play party popper and party pooper and trying to damage India financially, economically, this could be a soft spot for him. So I would like to be a bit cautious, allow this trade tariff war to sort of stabilize over the next 30, 35 days, because supply chain systems also need to fall into place for America. We all know that the daily household items, or the low value items, as America would call it, are not manufactured in that country, and they have to depend on places as far flung as maybe China, India, Vietnam on one side, uh, Mexico, uh, Brazil on the other side, and Canada, Europe on the third side. So I believe a lot of it is work in progress. We need to see where things stabilize and who else come to bail out America's problems of imports.
Okay. Uh, so, is your fresh money going into fixed deposits, from what I gather?
No, no, I wouldn't say fixed deposits. I mean, there is better opportunity. Interestingly, we have an interesting issue which is opening today, which is the REIT from uh, Blackstone. They've come up with a very interesting product. This is with Satwa. I think it's known as Knowledge Reality. It's an attractive product, and it would address the issue of fixed deposit versus returns, and also getting a pop with some sort of capital gains which could accrue every now and then, which makes it a far better instrument than putting your money in FD or maybe treasury bills. So I think that's an opportunity which people with even medium-sized amount of money should look at. It's very, very interesting. And overall, the REIT uh, play has happened very well in the country, and the listed players, whether they are InvITs, whether they are REITs, have done reasonably well for investors.
Arunji, what has been your last purchase in terms of equity? And overall, if you see, have you sold more than you have bought?
Very tough questions you are asking today, Shell. But let's put it in perspective. On a net basis, I have been even Stevens. No new money going into equity, no money coming out of equity, but certain amount of churn to reflect the results that have come out. You get out of stocks which seem to have lost their mojo and done badly in the quarter, depending on the commentary. Some reinvesting in stocks which gave you a good, decent re-entry point, and waiting for the balance results to come, which in the next 10, 11 days will be at their maximum capacity of results being declared.
Okay.
So to give you a name, for example,
Arunji,
you would remember, Shell, that I used to talk of a company, Blue Jet Healthcare. Now, Blue Jet Healthcare reported numbers which the street was unhappy with because their gross margin fell some 3 odd percent on a base of 55%. And the stock gave you a 20% lower price movement. Now, that made it an attractive investment to buy, re-enter shares. I bought some of that, and I'm quite happy because the company continues to remain committed on its capex plans. It has surrendered some land in Gujarat, which they had bought, and have now decided to go to Andhra Pradesh instead, probably because they got a better deal there. And we all know that Andhra Pradesh and Gujarat are two states which are cornering a lot of investment in the pharma space these days. So that was one stock which caught my fancy based on slightly poor results, but the street hammering it beyond redemption.
okay. I'll request the PCI to kindly draw the long-term chart of PNB Housing. This is a stock that has, been in all sorts of negative news and has corrected fairly sharply. Even today at day's low, somewhere like 778, and till about a month ago, it was at 1140. The managing director of the company has uh, resigned. There's no other negative news, and this is something that Arunji has advocated as a long-term pick. Arunji now available at March lows, and more than 30% of its most recent high. Would you want to reevaluate PNB Housing against the backdrop of this news?
So, a very interesting question you've raised, Shell, no doubt about it. I should have actually thought of it that you would ask some question on it. But yes, it's a very interesting play. And let's look at it from a different perspective. We've had some financial institution stocks being in the news for the wrong reasons, where somebody was sacked for doing things which were against the interests of the company. We have one bank which is in the news because the MD and CEO has offered to settle some trading cases against him without admitting guilt and pay an amount as large as 5.2 crores. Maybe over time, 5.2 crores is not a large enough sum. But in this case, we have a example where a person is volunteering to step down and move on in life. He's giving that appropriate notice to the company. And because he's done a good job, the company's stock price takes a sharp beating. A little unfair from my perspective, but he did do a very good job of turning around this company, of steering it through some of the troubles that we had. He also, during his tenure, got the PE investor Carlyle to exit the company in totality as per the desire of Carlyle. There could be a hint of problem in the mind of investors that now this could go back to a PSU mindset, because now the dominant partner in this joint venture would now be Punjab National Bank. I believe it's a little far-fetched because companies like this, after so many years of being run by the PE investor and management, which sort of follows that stream of thought or that school of thought, they can't go back to a new changed mindset, reverting back to something like the PSU mindset. So whatever has happened seems to be a aberration, and one should look at this stock a little more carefully as a better buying opportunity now at substantially discounted rates, and I don't think the impact on the earnings, if any, could reflect the kind of price deterioration that has happened.
Correct. Yes, it's corrected 32% from its most recent high, and a good maybe a good solution would be to look at second quarter earnings, but anything that's available 32% lower just because the MD has resigned merits attention from at least serious value buyers such as Arunji. Before we let you go, sir, December 2025, the value of the Nifty, would it be better than what it is today, or should we girdle up and tighten our seat belts and maybe wait for 22,000, 21,000? So which way does the cookie look to you? 26,000, 26,500, or 21,000, 22,000?
So without giving you a number, let me give you the direction. We are currently at levels of about 24,000 odd, 24,500, 600, if I could say so. We will see lower levels than this in the coming few months, and we will thereafter rise to levels which are higher than what we are currently. In short, what I'm trying to say is that we have downside left. Probably that downside will factor in the uncertainty on the tariff, on the trade wars, on the global economic, political, social, all those kind of fronts that are now currently open, stabilize, and then markets will start sort of building on strength. So lower levels initially, followed by a robust recovery. Whether we will cross the highs of 26,000 odd that we had seen and make new lifetime highs before December looks most unlikely. But yes, we should be at levels which are higher than current when we end the year, calendar year 25.
With that, Arunji, we'll call it a day. And on this very hopeful note, we'll thank you. As always, it's very, very interesting to listen to your thought process and thinking that goes behind exiting and entering stocks. Have a nice day, and I look forward to meeting you in Mumbai soon.
Thank you. Thank you, Shail.
That, ladies and gentlemen, was Mr. Arun Kejriwal. He's a market veteran and a very, very strong observer of IPOs in the market. He talks about all-time plastics and the BlackRock REIT that is in the market to raise fresh funds. We'll be analyzing those IPO as well. Thank you so much for your time, and have a nice day.
Not all numbers are born for the balance sheet. Some are born to bring a smile. Some usher the future. Some make you stand tall. Some numbers light a fire and fulfill wishes. Some spoil you silly. Some echo joyful shrieks. Some numbers have smiles written all over them. Some make the planet happy. Some make the planet healthy. Some numbers rise against all odds. Some are made for dreams. Not all numbers are born for the balance sheet. As we spread our wings globally, We at Mahindra believe that the numbers we are most proud of are the number of lives we have touched. Mahindra. Together we rise.
India's economic architects, together on one powerful stage, from Nitin Gadkari to Arun Panagaria and Montek Singh Ahluwalia, visionaries who are shaping India's future, all debating the Viksit Bharat roadmap, where legacy meets leadership. Here, the real policy playbook: finance, roads, reforms, disinvestment. Nothing is off the table. The inside views, uncensored. Only at Adani Business Today, India at 100, 8th August 2025, Shangri-La Eros, New Delhi. India's economic architects, together on one powerful stage, from Nitin Gadkari to Arun Panagaria and Montek Singh Ahluwalia, visionaries who are shaping India's future, all debating the Viksit Bharat roadmap, where legacy meets leadership. Here, the real policy playbook: finance, roads, reforms, disinvestment. Nothing is off the table. The inside views, uncensored. Only at Adani Business Today, India at 100, 8th August 2025, Shangri-La Eros, New Delhi.
Well, I just got here from my Tesla to charge it. Well, that's right. We already know that Tesla has been made its entry in the Indian markets, but today we are launching the great charging infrastructure of Tesla. Well, this, what you're seeing, is a supercharger. It's first supercharger which is launched in India today. Well, we'll show you a very simple demo of how to charge your Tesla. But first of all, it's a very simple procedure. Everything is on your Tesla app. You can just open your Tesla app, see where the nearest charging stations are, whether it's superchargers or wall connectors. It's a very easy procedure. This is the supercharger. You just push up the pin and slide it down. The plug will come in your hand and you press it and it will be opened automatically. Once you put it in, it will be charged. Once you see the blue light, it's ready to connect. And after you see the green light, as soon as the green light pops up, that means that your car is ready to charge. Well, it's a very easily and seamless process. There is no QR codes to scan, no definite procedures to follow. Once your charger is connected, inside the Tesla car, you can see the screen of how much the car is already being charged. It's showing that it's 2 minutes remaining and it's 87% charge as well. Well, this is the very simple way to charge. Well, talking about the supercharger, it charges about 267 kilometers in 15 minutes. Superchargers can just charge your car in 15 minutes for about 267 kilometers. Well, behind you can see these are the wall connectors, also known as the destination chargers. If you're traveling intercity, you can easily just connect your car with these. These are the 4 home connectors, destination connectors, or wall connectors, whatsoever you can say. Well, this is the first location, which is in BKC. More 3 locations are coming up in Mumbai, which is Thane, Navi Mumbai, and Lower Parel, which will have in total 16 superchargers and 16 wall connector. Well, it's a very seamless experience. Charges will be deducted in your Tesla app after the car is charged. Automatically the charges will be deducted. It will be rupees 24 per kilowatt for your supercharger and rupees 14 per kilowatt in the